Hello, this is Terrace. Welcome to my channel. I'm so excited and honored that you have chosen to tune in to my 7 principles of a trading plan. And this is principle number 2, draw support and resistance. So if you have not watched the first principle, which was titled create a watch list, please go back and look at that. These videos are not exhaustive. They're less than 10 minutes long. So you can just pop this in while you're driving to the store or while you're listening on your walk. However, I just grow so tired of super long videos. I'm like, make your point and hit the stop bar, stop button, or whatever it is. But anyway, I won't prolong the time. I won't be one of those people. So principle number 2, draw support and resistance. The first thing that you want to do after you have created your watch list, you want to go to the weekly time frame and you want to create your support and resistance lines. Now, if you are unfamiliar with what support and resistance is, then you need to understand that we buy on support and we sell on resistance. Support is like the floor, which means that it holds the price up and it generally pushes the price up. Resistance is like the ceiling and it pushes the price down. Now, I won't go too deep in detail with that because if you're watching this video, then you probably have some idea of what support and resistance is. If you do not, you can just do a simple Google search and type in support and resistance and look at the images. All right, so I'm going to show you all a quick support and resistance. Whenever you are doing a particular chart, you want to make sure, you want to ask yourself, is this stock trending or is this stock ranging? This is an ETF that I like, that I've invested in, and it is SPHQ. It is an Invesco exchange traded fund with S&P 500 quality ETF. So now you do not have to be a trading genius to realize that this stock is in a trend. This platform that I am using is Thinkorswim with TD Ameritrade. And you can see that this stock is in a nice little trend. Every time it comes down on this line, it just bounces right on back up. And then you can see we had quite a bit of a fall because we're in that season of the year where stocks tend to draw back. You can either use a trend line like that, or you can use my favorite. You can use the Bollinger Bands. So let's just put our Bollinger Bands on there. Voila, there we are. So every time that the stock is trading at the lower end of the Bollinger Bands, that can indicate a signal for you to enter in on this particular stock. It's totally up to you how you want to, what indicators you want to put on your chart. These are just simple suggestions. I like the Bollinger Bands, especially for stocks that are trending, because it's pretty predictable. So it just kind of tells me there's not a lot of fluctuations. There's the moves are not random. They're pretty much gonna, follow a certain structure. So I like using Bollinger Bands when I'm using stocks that are in a nice, healthy trend. But for those stocks that are not so trendy, that are, this is Goldman Sachs. You all know I love Goldman Sachs. If you've known me for 6 days, you know I love Goldman Sachs. So the first thing that you want to do after you've created your watch list you want to come up here to your weekly time frame. Now, do not fret, because if you do not have Thinkorswim, you can use Yahoo Finance. It is a wonderful resource, and you can go on there and draw support and resistance lines on Yahoo Finance chart as well, and they will actually hold on Yahoo Finance. So the first thing that I would do if I'm drawing support and resistance line is I'm going to start at the left side of my screen. Now, I'm not going to come all the way over here and draw support and resistance because the price is way up here. I'm only doing it down here just to kind of give you an illustration of how I draw support and resistance. So right here, let me change my drawings. So right here, I am changing. I'm going to mark this area here. And like I say, I'm not going to go really deep in to support and resistance. I'm just really going to just kind of go fast with this because I don't like for my videos to be extra super duper long. So the reason why I put a line right here is because this is an area where the stock came and it abruptly dropped. So I want to mark that area because guess what's going to happen to this resistance line once the price breaks and closes above it? It's going to serve as my automatic support. And so I'm going to be looking for this stock to break and close above this line and create some type of pattern to signal a continued up move. Okay, so what's our next area? Right here. That area right there. And notice that I'm putting my resistance lines at the opening of the red candles. And I'm only marking resistance lines. I'm not doing support lines because, as I mentioned, these resistance lines is going to turn into my support lines once the candles have broken and closed above my resistance line. You know, you don't want to junky up your chart with a million different lines in your chart. I mean, you know, just don't do it. Okay, don't do it. All right, so we're going to come up some more, and here's another area where it went down significantly. Even though these are two like hammer-like patterns, I'm still going to mark that area because that was 2 weeks worth of down movement. This is one reason why I love using the weekly time frame, because I have less noise. I don't have as many candles, so I'm really getting a true sense of where that drop actually happened. I want to mark this area right here because these are strong areas of resistance. So I'm going to mark right there at the opening of the candle. And I hope you all know the anatomy of the candle, of a candle. If you do not, then I offer a monthly options class, and we go over all of these things. But you should understand that the anatomy of a red candle, the opening is at the top of that candle right here. So in other words, you have the high, the opening, the close, and then you have the low. That's just telling you what the price did in that particular session, okay? All right, and then I'm gonna mark this area right here. The reason why I didn't mark this area is because it's just one candle. I like to see at least 2 candles before I mark my areas of resistance. All right, once you have created your watch list and now you have placed on your chart your support and resistance lines, you're gonna go to the daily chart and just look how beautiful that falls. Look how beautiful it came down here. This was once resistance right here. But once the candle broke and closed above it, it formed this beautiful hammer. And I'm going to widen it out so you can see it really good. But it formed this beautiful hammer here, indicating that this stock may continue up. And that's exactly what it did. And then it created this resistance area, which in that case, you will get out the trade. If you're a short-term trader like I am, well, I can't really say I'm a short-term trader. I'm kind of a mixture. I like to trade long-term, short-term, and I also like to buy shares. But this area served as support every time it came down here. So 1, 2, 3, 4. Now your job as a trader is you're waiting for some type of pattern to form on your support and resistance line. This is going to give you the signal when to get into that trade based on the fact that they don't have any news that is surrounding that stock and could cause that stock to go down, or just based on market sentiment. I mean, are we in a down season? Is the market, did they just have earnings? What's going on around that stock? But this is what you're going to do. This is what your chart is going to look like. And you don't have to move these lines anymore. Like, they're on here forever because this is structure. Structure never changes. You don't have to have a million indicators on your chart. All you're doing is placing where the areas of structure is, and you're waiting on some type of candlestick pattern to tell you whether or not to get in or out of the trade. Now, here recently, this area right here was created as resistance. And you can see once the candles broke and closed above it, it pushed down on it and proceeded to go up and create a whole nother area of resistance. So this is a nice piece of change here. So from 393 all the way up here to 418, that's a little over $20. That's awesome. And look what happened when it came back down here on this area of old resistance, new support for the first time. It went all the way up. Back up here, retested this resistance area from over here, formed some type of pattern to let us know that the stock could be going down, because there is no guarantee that the stock will do what you predicted to do. Stocks can do whatever they want to do. Nothing is 100%, nothing is guaranteed, but this is a high probability trade in that you have an inverted hammer here at an area of resistance. Now, we did draw the line based off of this pattern here, but you can clearly see that right here is where resistance is. So if you saw that, then and you took that trade, then that would have been a successful trade, because the stock actually dropped way down here, bypassing this support level, dropped all the way down here to this support level, and now is in an upward trend. This is why I love Goldman Sachs, because Goldman Sachs is such a wonderful stock in that it is predictable and it gives out a lot of points when you're trading it. So anyway, I hope this video was very helpful to you. After you've drawn your support and resistance, you're going to go to the weekly chart first, and you're going to make your resistance areas first. You do not have to draw lines all over your chart. Please remember that. You can fine tune it on the daily chart. For the most part, I'm trading from the daily chart. I'm waiting on some type of pattern to form at those areas of support or resistance to further tell me when I can get into the trade. I also use those patterns to tell me when to get out of the trade. And if you take my class, then you'll know, and you'll hear me say that you should know your exit for a loss. You should know your exit for a profit before you enter that trade. And the way we do that is we have candlestick patterns that we follow. If we are getting into that trade based off of an inverted hammer, then once the price has gone above and closed above the high of that inverted hammer, then we exit the trade for a loss. And that's how we manage our losses, and we stay in the game as a trader without blowing our accounts up, because we follow our rules and our rules help us to succeed. So that is the end of this video. I hope you subscribe. I hope you have a wonderful day and you are blessed. Thank you. Bye-bye.